Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about the IT sector and especially the mid-cap IT segment, which has been brutally, you can say, bought down over the last few weeks, and the valuations have become attractive from a long-term point of view. So some of the top picks in this mid-cap IT space that I believe could do extremely well over the next 3 to 5 years, I bring those to you. So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these IT firms, here's a small request that kindly support me on Patreon. And once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. So that's a 16% discount. And also, if you cannot pay on Patreon, you can join the YouTube membership that is available on a monthly basis, and you get all the benefits of Patreon on YouTube. Now about the sector, some of the top companies have emerged in the last few years in this sector, and demand for IT services has surged post the pandemic. So what has happened is that before that, IT was trading at 18 to 20 times. Most of the IT companies, even better IT companies, were trading at maximum 24-25 times. The PE has expanded sharply because there is a sense of understanding that there is a huge need for infrastructure in IT in many of the companies, which were not working from home but now need to be and are forced to work from home. And most of the technology firms, other technology firms or platforms, etc., you can say online firms, online retailers, they all need IT infrastructure because most of their businesses are now based on work from home segment. So companies of top class firms in their own respect, these are all and is becoming a sector of prominence, the mid cap IT space. And it has run up a lot over the last few months. So there has to be some kind of consolidation and decline. And some of the mid caps are leaders in their own space, and I have brought those to you. So they have declined over the last 2 3 weeks, and I believe that many of them, out of these 4 5 companies, at least 3 to 4 companies are at very attractive levels from a 3 to 5 year perspective. So the first in this list is Happiest Minds. It came out with the results a few weeks back, and the results were fine, although valuations were stretched, so it had to fall. And I brought that up for all my Patreon members immediately after the results as to how I feel about the stock, and exactly the same way the stock has behaved from those 1300 1350 levels. We have seen a sharp decline, and it is now below 1100. So basically at these prices between 1080 to 900, very good levels to accumulate in this 20% range. And one can accumulate here. It has one of the best margins in the industry, and it has a very big high net worth clients that they have altogether. So I think around 900 950 with an EPS of around 12 rupees that it would clock this year. I think an EPS of closer to 15 rupees would be what it will be clocking next year. So around 60 times 1 year forward for a company of this stature is okay. It's not extremely expensive, but you need to understand that normally it should trade around 40 to 50 times. So in that regard, you could see even 700 on the stock. So what you need to do is wait for further declines towards 950 930 to start accumulating 980, and then keep on buying at lower levels. Through an SIP mood, or by waiting for some sort of declines on every result and keep on buying. So probably in the next 2 quarters it might touch 700 750 as well. So those will be very good levels to get into from a 4 5 year point of view. It has been a wealth creator for investors ever since it got listed. 160 rupees was the IPO price, went up to 1600, so it was a 10x in no time, and so it is consolidating, and the consolidation could continue for a longer period of time. So currently at attractive levels from a long term point of view. The second in this list is BuilderSoft. It has been an outperformer in the segment that is producing and have a decent order book pipeline. So what has happened is it came out with 30-35% profit growth year on year, and before that the stock started moving. So what happened was around October November when the markets fell, these kind of companies just started moving up from 300-320 levels. BuilderSoft went up to as high as 580-600, nearly doubled in about 2-3 months, and now it is gyrating from those highs to lower levels and around 450 rupees. It has come down to a market cap of 12,500 crores. I would say it is still stretched, but you can start accumulating here. Valuations are very reasonable compared to something like an Happiest Mind. So what one needs to do is one can accumulate the stock at current levels and on dips to 400, around these 400-450 regions. Very strong supports are there for BuilderSoft. So one can accumulate here from a 3 to 5 year point of view. I see 1,000 plus levels easily coming in the next 3 to 4 years. Very decent stock to buy at around 400-420. At that point of time, the market cap would go down to around 11,000 or 10,500 crores, which is very reasonable for the kind of sales that the company is doing. It has run up in recent times, so the stock may continue to you can say consolidate, and that's why it's not a say a long term not a short term play, not a trading play, but it can be accumulated here. So whenever markets nosedive, the stock is down 5-7%, keep on accumulating BuilderSoft as well. The third in this list is MassTech, one of the better mid-cap stock. In fact, probably the best in this list because of the kind of valuations it is trading at. It has an EPS of closer to 100 rupees, 105 rupees, and currently the stock is around 2,700 rupees. So it is trading at 26-27 times earnings, which is extremely cheap. If you look 1 year forward, say FY23, we are looking at an EPS closer to 130 rupees, and it is trading at only 20-21 times 1 year forward earnings. So very attractive levels. In fact, if somebody wants to buy something in the IT pack for a multi-bagger returns over 5-7 years, I think this is one of the stock to look at. The market cap of the company is around only 7-8 thousand crores, 8 to 9 thousand crores. It's not extremely overstretched. In fact, it has sales which is closer to 7-8 thousand crores. So it is trading at one time sales. All ingredients of a multi-bagger in this stock. Margins have been good, but last quarter it got hit, and many of the companies had a hit on the margins in the last quarter. As I said, valuations are reasonable at around 23 times current earnings, and 1 year forward earnings it is trading at 20 times. Promoters are buying at these levels of 27-2600 rupees. Very low downside, I would say. I think maximum 2400 could be seen on the stock. These are very good levels to accumulate, but have patience with the stock in order to make money. It has a large number of large clients and discussions on with others for huge deals. So probably in the March quarter or in June quarter they'll come up with 2 or 3 announcements with large deals also. It is a buy at a current market price and on declines. I think very easily it could double over the next 2-3 years and could be a multi-bagger over the next 5 to 7 years. MassTech. The next in this list is Coforge, and so on Coforge, it was an NIT Tech earlier, one of the better stocks. Again, the valuations were stretched around 2 months back, but now it has come to very reasonable levels, and that's why it has come into the list. So basically, it's one of the renowned mid cap companies. In fact, the larger mid cap companies with around 25-30 thousand crores market cap. So as I continue with Coforge, so basically it has quite a large number of market share in the industry with a number of large clients in it, and is becoming a company which could be regarded into those large five companies, have been a consistent performer for past few years. The margins have improved. The company has produced very strong numbers over the last 5 7 years, and there's strong management and high return ratios for the company. And management is doing all their bets to become a large cap IT company into this domain, and it's at buy now. After the fall from a 3 year point of view, I believe it has fallen from around 6,000 levels all the way to 46 4500s. Very good levels to accumulate the stock. Again, no immediate rewards possible. It could very well go to 4,000 as well, 4100. There's no denying that. So keep buying by 40 50% now, and some on declines, but basically it is a very strong long-term play, as cloud and data analytics is going to only remain in demand, and this is one of the companies that is big in this segment. It's not one who just tell about cloud and data, but they are big in this cloud and data segment. And hopefully Coforge will come out with very decent numbers in the December and March quarter. So this March quarter would be good, and next year's December and March quarter would be good. In the interim, it might just be in consolidation mode, so a very good time to accumulate for the next 4 5 months from a 5 year point of view. The next in this list is KPIT Tech, probably the best of the lot in terms of stock performance. Not quite in terms of the business, because in terms of business and valuations, I believe MassTech is the best pick in these five. But KPIT Tech, because of the kind of business it is doing, because of the kind of performance the stock has shown, and the fact that it has some exclusivity on some of the businesses that it is doing, it has a run up hugely. I mean, it is still trading at 50 55 times earnings. I would say it will have an EPS of around 10 rupees for next year. It is trading at 560 rupees, so 55 56 times. I would say wait for declines, wait for 470 480 levels to accumulate, even 500. So what you can do is buy some at these prices, and then on declines one can accumulate at 500 470 440. There could be a chance that we'll have a reasonable decline in the IT sector over the next 2 3 months. So I'm not saying that these stocks will continue to perform and will do extremely well going forward, but I believe that the numbers are set to do well over a 3 to 5 year play, because you need to understand that valuations have run up in these companies, so you have to be slightly cautious on that. So it has been producing top numbers and boasts of strong clientele with large deals. Valuations are still stretched. Look for bad days in the sector and in the market to buy. So again, below 500 are good levels to start accumulating the stock. It's a very good 3 to 5 year play. So this was a video on the mid-cap IT picks. Let me know what do you think about these companies, and please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.